Okay, folks, I know you may not want to hear this, but tax season is looming. People, that April deadline will be here before we know it. And filing your returns can bring about a lot of questions, maybe some anxiety of what could go wrong in the process. So here with us to talk about some important things to keep in mind this year is certified public accountant Joshua Jenson. Thank you so much for being with us here.
You bet. Good morning.
This morning. Good morning. So let's start with the 2017 deadline for filing your tax returns. My understanding, it's been pushed back a couple days.
Yeah, it has. So basically when a deadline falls on the weekend, we get the following Monday. But there is a holiday in Washington, D.C. That extends it actually another day. And so this year, it's, believe it or not, April 18th is our deadline this year.
Okay.
So we get a couple extra days.
So mark your...
That's right. That's
April 18th is the deadline. You know, in a perfect world, this is a painless process. You don't forget, you know, any of your deductions that you can file for. But that doesn't happen for a lot of people. What is the biggest mistake that you see made when people are filing the returns? You
know, a lot of times they file too early, and they'll forget that they had some interest income or maybe a W-2 from earlier in the year, or maybe some stock was sold. And so they've hurried and filed their return, trying to get their refund, and it turns out they've forgotten this kind of basic information. The next is when people sell stock. Many times what they get from the investment company will just be the sales price. But what a lot of people remember, or forget actually, is that you get to deduct the cost basis. And so you should only pay tax on the gain. Many people just pay tax on the full sales price. That'd be another one that kind of is a common mistake that people will make.
Okay, I bet you see that all the time. And I was telling you, I was talking to one of my good friends yesterday who's a CPA, and she and I were kind of just going over topics, and she said make sure that he includes all the common deductions that people should remember to take when filing. So kind of list off some of those that everyone might not remember to include.
Well, believe it or not, many people forget that you can even itemize your deductions, and they just go with a standard deduction thinking it's easier and simpler. So if you own a home, make sure that you're deducting your mortgage interest, of course, but a lot of people forget that you can deduct your second mortgage, the interest on that. People actually forget to deduct their real estate taxes, as well as state taxes. So in Oklahoma, we all pay state taxes. We get to deduct that as an itemized deduction. And then charitable contributions. Believe it or not, a lot of people are surprised that whatever they give to their church, they get to deduct. You want to make sure you have receipts. And then usually on page 1, if somebody's self-employed, page 1 of the Form 1040, if you're self-employed, you have to pay self-employment taxes. And a lot of people forget that you get to deduct half of that tax on page 1. So there's just a few lists there.
And I had a few viewers write in about those itemized deductions that you're talking about. Specific, the charitable contributions that they've given. And a lot of people ask me, you know, when I go to Red Cross and I donate old clothes and I get the tax deductible receipt, does that actually do anything for me in the end?
Yeah, we call it tax deductions in your closet. And basically, they will not, any of these organizations are not going to give you a value for it. They're not allowed to. So you do want to have a receipt. Basically itemize down what you gave, whether it was, you know, 4 bags of clothes or a piece of furniture or that exercise bike you never ended up using. And when you're doing that, think through maybe what you could sell it for at a garage sale. That's kind of usually the value. If you're struggling with that, usually we say anywhere from 10 to 20% of the purchase price. But without that receipt, you actually do not get to take the deduction. So you definitely want to have that receipt in hand in the event that the IRS inquires of that.
Okay, good to know. And kind of look into your crystal ball for us here, or maybe some changes are already in the works that are applicable. But with this new Trump presidency and kind of this sweeping push for major tax reform, will anything be different this time around under new leadership, or are we looking ahead to 2018 instead?
Yeah, great question. Most of the changes that I think we're expecting, we would not really realize except in 2017, and to your point, we would be seeing them in the 2018 filing period. However, there has been many times where there has been a new incoming president back when Clinton came into office, and it wasn't until late into tax season or even into May that they did make some changes that went retroactive all the way to 1/1 of the prior year. So we are urging our clients to maybe not be as anxious to hurry and file their returns, especially if you're a small business owner, because there could be some retroactive changes. Don't know of any in play, but it is possible.
Okay, awesome. And also, on average, what is the time period to get your refund back? What's kind of the standard? Right.
Well, one of the things that the IRS came out with is it seems that all the forms are done and they're basically ready to go. If you have earned income credit, they're indicating that they won't be issuing those refunds until late February. The reason for that is there's a lot of fraud, unfortunately, in those that can claim this earned income credit. But otherwise, it seems like it's within about 10 business days. Sometimes Oklahoma's a little faster than that, but that'd be kind of the standard.
Okay, and we're about to toss it to break, but last thing is you say if you have any questions, contact your CPA.
Yes, yes, you can go to knowwhatcounts.org. Or you can go to findyourcpa.com, both sponsored by the Oklahoma Society of CPAs.
Okay, perfect. Thank you. A lot of people chimed in. A lot of people chimed in and had questions for you.
Good.
So let's get to the first one here. Thomas Shuck wants to know, since Obamacare regulatory hardships are being eased by the Trump administration, does that mean no tax for not having health insurance for all 12 months of 2016?
I'm going to say no. There haven't been any changes. You know, the president just got sworn in, of course, on Friday, and so it's too soon to know really what changes are going to come into play. Usually the first 100 days of any presidency, a lot of changes are proposed, and of course Congress has to go through those. There is the possibility that it is stricken right away, but I think it would make pretty big news. So I'm going to assume right now, and I would advise to assume that there is a penalty.
Okay.
If there isn't, it'd probably be for 17.
In the TV world, we'll just say stay tuned.
Yeah, stay tuned.
And we'll keep you posted.
Yes.
Ryan McCabe wants to know, at what point is it recommended to have your taxes done by a professional?
You know, being a CPA, I'd say don't try it alone at home, right? So for us, basically what I'd recommend is if you have much more than a W-2 and maybe some interest income, because you could do that return literally at irs.gov. They have a way that you could prepare that return there. You probably want to get a professional. You know, there are some programs where you could get those things done for free, but a real professional that comes into play is if you've had any stock sales. We talked about that earlier. In terms of itemizing your deductions, if you have a lot of unreimbursed business expenses, so related to your job. But if you have a small business, you really have no business doing your own tax return. There's too many deductions that you could miss. You want to make sure that you're capturing all the income that you're supposed to. But things like special depreciation on equipment that you bought or vehicles, getting the special deductions. So the way I'd look at it is don't look at hiring a professional as a cost, look at it as an investment to hopefully save you taxes that in essence pay for that cost, so to speak.
And a lot of people who maybe aren't business owners do their taxes online. Is there a specific website that you would recommend?
For business owners?
Or just anybody?
No. So, no.
Okay.
From the standpoint of irs.gov for very simple. Unfortunately, as a CPA, I'm not really a fan of the online services or those that you kind of walk into a store, a corner store. And the reason why is that as a CPA, we have to have 40 hours of continuing education every single year. We have to have licensing. We have to have a degree. We pass a very rigorous test where
multiple tests, yeah.
Yes, and unfortunately, I don't know why, but anybody can prepare your taxes. Your mailman, your barber, your mom. But, you know, basically, if you're 25 and your mom's still not cutting your hair, she shouldn't be doing your tax return. Okay,
good to know. And I do want to get in this last viewer question. Jennifer Jones wrote in and said, my 14-year-old just asked what it meant to be able to write something off. I don't know exactly. Maybe I'm the only one who doesn't know and just publicly proclaimed my ignorance, but I didn't think that was an ignorant question. I think if she has the question, so do a lot of other people at home. So what is that process and how does it work?
Yeah, absolutely. Well, I'll say first that 14-year-old is going to probably be a millionaire someday already thinking about what is a deduction. Really, a deduction in its simplest form is something that reduces down your taxable income, which more importantly reduces down your tax. So we had talked earlier on some deductions for an individual, but let's say for a business, so you've sold as a restaurant a piece of cake and a sandwich. But if that's what you pay tax on, the gross amount, that would be unfair. What you get to deduct in that is the cost of the mix to make the cake, the cost of the bread and the meat. You had to pay someone to make it. You had to pay someone to serve it. You had rent. You had utilities, etc. You'd want to be able to deduct any and all of that so that really that sandwich and cake that maybe sold for $10 after the cost, maybe those deductions reduce down the taxable income to $2. And then you're only paying tax on that.
Okay. Well, Jennifer Jones, I hope that helped you out just a little bit. A lot of moving parts when it comes to taxes.
Yes, absolutely.
But Joshua Jenson, thank you so much for being with us.
You bet.
We appreciate you.
We'll
be right back.